Welcome to the Daily Brief, where I'll go over the highlights for the action in the market for Monday, September 26th, and then see how things look for Tuesday, September 27th. It was another negative day. We were down over 1%, but we're still seeing a convergence of a lot of bottoming type of indicators. We're seeing sentiment really start to get extreme. So if the market's going to try to make a stand, it's probably going to have to do so here pretty quick. So let's go back and talk about what happened. Right at the open, we had a slightly lower open, and things were looking positive right off the bat. The NASDAQ was just doing really well at the beginning, and we saw some initial buying in the S&P, but we did not get up to R1 at 37.41. As the day went on, well, then that's when some selling came in. Prices went down to the unchanged level and even dropped below that. So we went negative. We ended up going slightly below Friday's low at S1, which was at 36.51. This is a positive thing. Prices did try to go lower. There were a few attempts to go down even below that, but that support level ended up holding, and that could be positive. Going into the close, we did see some recovery, but it's not what I've been talking about, where we see early weakness, late day strength. That didn't happen in Monday's session, although it did bounce up a little bit from that low that we set. When we did close, we ended up setting a new 52-week low for the S&P 500, and that's never a positive thing. We were down 1.03%. Volume was above average. The technicals are negative, but we're showing a lot of oversold indications, short, intermediate, and long-term, because of the inflation and interest rate situation, not only in the US, but happening globally. And a lot of the news ended up coming out of Great Britain on Monday, and I'll address that here in just a moment. So what are some comments? We did see some early strength, and it looked like, okay, maybe we're going to get a rebound. And the NASDAQ was up over 1%. Well, that didn't last very long. And what's kind of causing this latest fiasco right now are currency movements that we're seeing, specifically as they relate to the British pound. And if you watch the full-length version of this video, I bring up a chart of the British pound and talk a little bit more about that. It fell to an all-time low against the dollar. So if you want to go to Europe, or especially the UK, that might be a good time to go. It came down to 103.49. Then it started to really bounce up because there was this belief that the Bank of England was going to come in and have an emergency rate hike that would make the pound more precious. And it bounced back up to 109.33. But then the Bank of England came out and said, well, we won't really be addressing that issue until our next meeting on November 3rd. So that took the British pound back down. And then with that, US bond prices also fell in reaction to yields rising as well. So there's a lot of rumors going around. There's some hope. There were some scenarios that they developed in England that didn't play out, and then that led to some more weakness. The US dollar continues to be strong, and it's now outperforming oil. Yes, I have an intermarket analysis chart that I show in the full-length video where oil has crossed below the dollar in its performance going back to the beginning of the year. Many of the indexes that we follow are hitting 52-week lows, including the S&P, the Dow, the transports, mid caps, small caps. All right, so, and that's never a good thing. We are oversold in the short and intermediate term, and we even have some long-term charts that are indicating that we're getting a little extreme negative. The 30 to the 5, the 10 to the 2, and the 10 to the 5, those yield curves still remain inverted. Sentiment is getting more over towards the freak out stage. So that's another thing that could be positive. When it gets to a real extreme reading, we like to use that as a contrary indicator. We didn't have any economic reports that came out on Monday. Our trend is negative because the ADX is going up. It's above the moving average. The red line's on top. The bias is negative, and our momentum going back the last number of days is also negative. So what's our outlook? We are negative with the S&P, but we're oversold on a lot of different areas right now. Doesn't necessarily mean that we have to bounce right away, and it doesn't necessarily suggest what the bounce is going to be. but we're just seeing a lot of this coming together. At other times, this has produced some kind of a significant bottom. When we see that, if that even develops, then we'll have to reevaluate, okay, how does this bounce look if it even happens? We have durable goods coming out on Tuesday, the FHFA housing price index, followed by the S&P Case-Shiller home price index, consumer confidence. So again, durable goods is kind of the biggie in all of this, and consumer confidence can be a big one too. We have all of the geopolitical events. There's still some rhetoric and rumblings between the Russia-Ukraine situation, which could escalate at any time. There's still a lot of the situation in China that is producing a lot of concerns in the US, but the markets are still fixated on inflation and interest rates right now. And then any Fed speak, if that happens to come out. So our scenarios, yeah, we have to go with the down scenario, but would you feel comfortable going short right now with sentiment so extreme negative, with us at support still, with a lot of things coming together that there might be some kind of a bounce? So that would be not a real high confidence position, at least in my opinion. But we certainly can't go with the up scenario because we don't know if we are going to, in fact, get some kind of a bounce and how long that bounce may last if it does, in fact, happen. And it's really hard to go sideways right now because the ADX is above 20, showing that we're in a trending environment, and the red line's on top, which is suggesting that we are negative. So our conclusion then, the S&P is negative. Can't argue with that. Short term, it's negative, but oversold, as is the intermediate term. And even the long term is showing some signs of being oversold. So thank you. Please feel free to check out the full-length video if you want to see more of the charts and my analysis and commentary. And have a great day, and I'll talk to you in the next video.